Hi guys, this is Jackie Cooper with JCooperTravels, and I am so excited today to have Joshua here. He is an expert in taxes, and that's something that we all need to know. And he is talking about many things, but especially something that's close to my heart, which is travel, as well as travel savings, as well as how we can extend our dollars to do more travel. Now, I know all of you who are listening right now are probably saying, Jackie, we're in a staycation. We are not traveling. But that is not true. There are people who are taking road trips. There are people overseas in Europe who listen to this podcast that are going from border to border. I know temporarily we are in the COVID situation, but we are going to be traveling soon, and we're going to be doing it safely. And it might not be the old normal, it will be a new normal, but we're going to be able to extend our wings and fly. Joshua, thank you so much for being here. I'm so excited to have you. Would you like to introduce yourself and just tell us a little bit more about your background?
Yeah, so my name is Joshua Thompson. I run a Thompson Tax Group here in Southern California. I got out of the military about 4 years ago. I was in the Marine Corps, and I got out, ended up going to school and found my love for accounting, got my degree in accounting. And after working for a few CPA firms, I figured and I learned that a lot of people don't know much when it comes down to taxes. And I've learned a lot of accountants actually don't go to their clients and educate them on some things that they may not be utilizing, or something in the news that is coming out, just not have that relationship with them. So I really dived deep into tax. I went and got my enrolled agent, which is a designation with the IRS. A lot of people are like, what is EA? It's really, you focus 100% on tax all your time. And even though my degree is in accounting, that's my big specialty is tax.
So just so I know, because I don't, does that mean that you can practice in other states, or is it just in California? How does that work?
Yeah, so that's a good question. So the EA you're regulated by the IRS. So you could practice all 50 states. You have jurisdiction for it. You could practice in. You could do resolution work. Because a lot of times if you have resolution where, say, you owe the IRS, you don't know what to do, you need to be an EA, a CPA, or attorney to actually work with the IRS on that, to be able to sign a lot of the forms and work with the clients to help out in that situation. But really, at the end of the day, you're regulated by the IRS over all 50 states, and you have to have your continuing education every year, and 100% of it needs to be in tax. So
Wow, that's awesome.
yeah, it's regulated by the IRS, so there's a lot of information you got to stay on.
I know the tax code has gotten more and more complicated over the years. I used
Every
to,
year.
yep, every year. I mean, my background's law, and I used to love doing my own taxes, but then I decided, no, I'll hire a professional because it's just gotten way too complicated, and it takes time to stay up to date on all that.
Yeah, and even when they say it's like, we're going to simplify it this year, it's going to be different, easy, we're going to put it on a postcard. No.
Doesn't happen.
Yeah, it usually doesn't happen. It usually just means it's going to be more complex and everything's changing.
So I know that there are, for someone who travels like myself, I travel both for business as well as I travel for personal. And so there are different rules for individuals who are traveling for pleasure versus for business.
Yes.
So without going into a lot of details, because guys, you really do need to contact Joshua for any of your personal advice, because he's only going to give general information here on today's call. Sort of accountants and doctors, they only can give general information.
Yes.
But for personal or business, are there certain things that people who are traveling maybe should be thinking about keeping as documents or as supports, especially because I know you wanted to share information about the tax credit, the travel tax credit. So I'm going to let you kind of talk a little bit more about that.
Yeah, so when it comes down to traveling, just from a business standpoint, from a personal standpoint, we'll talk from the business first. You really need to make sure you keep your receipts and documentations on where you went. A lot of times when you have a meal there, you need to make sure it's with a business client, and you need to make sure that you have the receipt from that as well, so you can deduct it. Because the IRS ever comes to you or knocks on your door or whatever it may be, you need to show proof. The burden of proof is on you to prove that you have these expenses and that it was actually business related. Now, when it comes down to the personal side, a lot of times personal travel isn't deductible, but there's a strategy I'll talk with you guys a little bit about when we get a little bit further in this of how you can go about of using business expenses and personal travel and kind of combining the two to be able to deduct the whole thing by the IRS code. Just to be careful about it as you go forward with it. But a lot of times it depends on your specific situation, but for sure when you're a business, you need to have the receipts, you need to have the paperwork, you need to have a proof of what you did, where you went, so that way you could fully deduct it without any problems from the IRS.
So this is something that just popped into my mind where you were talking, and I think it's changed. How many years do you need to keep receipts?
Mm-hmm.
Because I used to think that it was 7 years, and then someone told me you actually only have to keep things for 3. How many years do you actually have to keep the documentation?
Yeah, so that's a good question. I just kind of posted something like that on Instagram too. So if it's a regular tax return, you have no issues, you don't expect any issues, you believe you prepared it correctly, it's 3 years. And the reason for that is because the IRS has 3 years to assess you a penalty or assess you saying you owe more before they can't go back any further than that. Now, there are situations where they can go back a little further. So for example, if you believe or you find out that you underreported your income by 25% or more, the IRS can actually go back to 6 years. And if you did fraud or you didn't file a return at all, they could go back unlimited and look at all your past returns. So really, if you could get past the 3 years and you believe you did everything correct and you don't expect any underreported income, you didn't do anything they call shady, then you could get away with just holding it for 3 years. I always recommend 4 years for most people just to give that one extra cushion. But 3 years is usually the golden rule.
Oh, then I can maybe go into my attic and get rid of some of the old boxes.
The same, we had a client we worked on. They were bringing in boxes and boxes saying, "This is my tax stuff," and we're looking. There was like, "This is from 2008. It's 2019." You know.
Exactly. So tell me a little bit more. I know I did an earlier podcast, but I am so happy that you're revisiting this because this is so important. The tax credit.
Yes.
It blew my mind when I saw a posting on one of my travel blogs that they were actually thinking about this from an economic perspective. They were trying to see how to stimulate the economy again, and we don't always realize the impact when different businesses go down. So when travel, the industry, is not happening, basically what that means is that people in the hotel industry are not working. People in restaurants are not always working because they get, some of those restaurants are in hotels or close by. People in convention centers are being impacted because a lot of conventions stop. The airlines, the Amtrak. I mean, when you think about the services and the quantity of people who are under this big umbrella, you know, it's amazing how much COVID and a staycation has impacted those industries. So talk to me a little bit more about the travel credit and what the vision is about having that. And also, like you and I talked about before we got onto the recording, when you might be able to actually benefit from it.
Yeah, so kind of just touch on a few things I believe you touched on before is the travel tax credit is going to be $4,000 if you're single. It's going to be $8,000 if you're married. And if you have a child that's 16 or younger, it's going to be $500 each child. You know, not 17 or 18, unfortunately, as of now, that doesn't qualify for. But it's also known as the Explore American Tax Credit, or you may see it as a tax rebate incentive program, the TRIP Act, something you can look into. But right now they have it only for domestic travel, and that travel actually has to be 50 miles further from your home. So you can't say go down the street, get in the hotel for about 2 weeks, and then try to write that off. You have to be 50 miles or more away from your actual home. And
I want to interrupt you just for a quick second. I want to re-emphasize the size of the tax credit because you said it, but I want people to listen and really understand the magnitude of it. If you are an individual, that's $4,000. What that means in terms of translation is that if you take an airplane and maybe the airplane is $300 one way, so that's $600 on your air. If you are staying 5 days at a hotel, that might be $200 a night. That's about $1,000. If you are doing meals during the week that you might be away, there's that. If you are doing a car rental, there's that. So their $4,000 is huge in terms of the number of trips, because it doesn't have to be just one trip. You can break it up over the course of the time that they allow. And I'm going to reemphasize the fact that if you are married with kids, sort of like the TV show, it's $8,000. It's $4,000 per person plus the children. So normally, if you are traveling or taking a vacation to Disney World or somewhere, wherever, you could easily spend on the tickets to the theme parks and the hotel a few $1,000s without even blinking an eye. So now what they are thinking about doing is actually giving you a credit. And I'm going to stop talking so Joshua can explain more. But I thought it was important to re-emphasize the size of this credit, and we're going to talk how can you use that to really extend the dollars. So Joshua, now I'm gonna stop and I'll let you continue on.
No, you're fine. You're fine. Perfect team right here. No, I know my brother, he has 7 kids, so he's looking forward to it. This gets passed. He's planning a big trip down to Orlando for Disney World. So I know he's looking at that nice tax credit, but it also works even if you drive more than 50 miles, you can actually use a tax credit for that as well. So say you're driving 500 miles or whatever it may be, you can use that towards the tax credit at right now, this year, 2020, you get 57.5 cents per mile. So you could multiply that 500 miles by the 57.5 cents, and that could go towards how much you technically spent, even though it's in mileage, on your travel. And the majority of the time we find that using a mileage calculation instead of how much you pay in gas is going to be more beneficial towards you. So that's one big thing you could look at. Also, as kind of saying a little bit earlier, some things, it's only domestic travel, unfortunately. So you can't, as of now, you can't travel to China or Australia or Japan, any of those countries. It has to be somewhere in the United States. The travel tax credit also includes something you spend on food and beverages, lodging, transportation, and even right now they're talking about live entertainment. So if you go to a sports event while you're there, or a concert or anything like that while you're there, that could be included with it. One of the biggest things though to kind of know about is what's not included is if you stay at your own vacation home, that's not included as of now, And like I was saying, I keep saying as of now because they're still trying to hash this out and get it to pass, but we have to start planning for it now so we can properly utilize it and really, extend our dollars, kind of what Jack was saying earlier, to make sure that we benefit or use it to our best benefit instead of cutting ourselves short and leaving money on the table. So that's one of the biggest things. I know, Jackie, you wanted to talk a little bit about, extending that $4,000, $8,000, or $500 per kid when you do travel. So I'll kind of let you touch a little bit on that if you want, Jackie.
Yeah, no, I appreciate that. So one of the things that I know that I shared with you as well is the platform that I give free access to, which is I Go for Less. And it's a wholesale platform, and customers actually can save up to 35% on their travels. So I was calculating that if you end up knowing that you are going to be traveling and your budget is actually $4,000, you can actually extend it by using a wholesale platform like I Go for Less, because actually if you multiply the 35% times the 4,000 and add that on top, that's the real value of what your vacation would have been if you had not used the platform. So it means that I could book at a really top resort, get and have access to 35% savings and pay a deep discount and really extend my travel. Or I could, do more the moderate side and take more trips. So there's a lot of benefits for it because that platform extends not just to hotels, but car rentals, excursions. It gives discounts and everything, even restaurant coupons, which can
Yep.
extend, what you're doing. I know
Yeah.
you have a bucket list. Where's your next trip for travel?
Yeah, so two big places for my bucket list that I really want to go to is I know it doesn't count under the travel tax credit, but it'd be Australia and Japan. I was in Okinawa when I was in the Marine Corps, and I was this close, or literally a few days away from actually getting to Fuji and seeing all that side of it. But at the last minute, they had to cancel it because we didn't have the budget, so we had to go back to Okinawa. But those are two biggest places I'm looking forward to, just because it looks so nice. Like it's beautiful. I like the culture. I like the people. And I know for Australia, when I go somewhere, I like to not only sightsee, but actually like go out and do a lot, whether it be hiking, a jog. We went to Colorado. I don't know if many people heard of it. It's called the Incline. And it's basically, I think it's around 3,000 steps, literally steps up a mountain. And you can see all of Colorado Springs and extremely pretty. And so that's kind of something I'm looking forward to do when I get a chance to travel to Australia, somewhere I really want to go.
Yeah, no, that's awesome. So what other information about the credit? If someone was to take a trip now, I mean, what's the time frame? Well, obviously it depends upon when they pass it, but let's say that they pass it this year. From what information what's the time frame that people would need to use it or lose it, and then apply it? Because those are two different things. You have to first use your trip under the guidelines that they give us, and then you have to have the documentation so you can apply to get the credit.
Exactly. So the way it's working right now, with it in the bill right now, it's for 2020 and 2021. Now they don't know, like we're saying, it hasn't necessarily passed yet, but like we were saying earlier, we need to start planning for it now. But right now it's just for 2020 expenses, 2021 expenses. And the way it's going to work is how it usually works on tax credit, at least, is you do your travel, you keep records of it, and then once you file your tax return is when you can really take effect of that tax credit. You'll either get a higher refund or owe the 4,000, 8,000, 11,000, whatever it may be if you're my brother, less in taxes due to this tax credit. So we're waiting for them to pass it, because right now there's no guarantee, but it's better to spend some time reading up on it, speaking with the professionals, speaking with the people like Jackie that could, plan your trip out, so that way you could really utilize this thing to the biggest benefit that you can.
Sorry, I had myself muted.
That's all right.
I have a dog upstairs, and so sometimes I have to mute out.
You probably heard mine once or twice.
It's okay. It's all good.
Open the door.
That's fine. So any last things that you can think of that they need to know about this tax credit, aside from obviously contacting you or myself for any updated information? Any last things that you can think of?
That kind of touched on everything out right now, because they don't have as much information out. So that wraps up everything that information-wise that's available to us. Hopefully we'll get some new information, and then you can reach out to Jackie or myself for any updates along those matters.
Yeah, definitely, guys. By activating your I Go for Less portal, because I give you a free link on every podcast, or reaching out to me, especially because Josh has created a free PDF, so that way it has access to information, so that way you can kind of do a checklist. There's a lot of great freebies that I can give you access to, but definitely by recontacting me and then being able to reach out to him. Both the information will be above our podcast for contact information, as well as above the YouTube. So another way that you can keep in the loop is by subscribing both to the YouTube channel, to the podcast channel. That way you can always revisit it, especially when you hear on the news, oh, the tax credit's been passed. Then you can kind of just re-listen and contact us both back, so we can help you out with getting the best deals, getting the best, making sure you're doing everything according to what the IRS wants. Because again, there's a lot of things that you can take advantage of, but you need a tax expert like Josh in order to sometimes know those ins and outs, because things change all the time, and it's, you know, it's definitely worth your while to hire a professional like him. So thank you so much, Josh, for being here. I look forward to other future tax topics. I know it's always on everyone's mind, especially when they start to file.
Yeah. Come February and April is big time frames.
Exactly. So anyway, thank you everyone for listening, and we will be talking soon. Take care.